So here we go. We're to Nigeria's insurance sector, and we started the year for the last 2 weeks looking at the various segments of the market. And now we've got to speak with Kari, who is the Commissioner for Insurance. That's the man who has a very curious title, a Commissioner for Insurance called NAICOM. That's the Nigeria Insurance Commission. A few days ago, NAICOM rolled out a new set of guidelines, about 35-page document for micro-insurance. That's the principal reason why he's here. But first, we've got to get his first word on the insurance market in the new year, 2018. Live from our Abuja studios, and here with me with that one. Let's get started. Good morning. It's good to have you.
Good morning,
Commissioner. We appreciate your time. So we're going to have your first word in 2018. What's your take overall, first speaking, if you're looking at 2018, the economy, the insurance market, what would you say?
Well, with every new year, every individual and corporate entities are hopeful for the new year. We always hope it will be better than the previous year. And with us too, we have resolutions like individuals have resolutions. We have set out priorities for 2018 vis-a-vis what we have been able to achieve last year against our plans of what we wanted to achieve. We are hopeful that things will pick up. The economy seems to be settling down now. Politics is settling down, though we are approaching the election period very soon. But we believe the insurance industry, with what we have been doing between the regulators and the industry, we believe consumers are going to see the benefits of that new relation.
So what do you consider as the, we want to look at the key issues for the insurance sector, but let's step back a little bit into last year. What's the state of the insurance market? Of course, we all knew the stock market went well. The insurance companies, which you oversee, also they enjoyed the stock market rally last year. But broadly speaking, the state of insurance in terms of a premium, in terms of risks, in terms of capital adequacy, in terms of regulation, give us a bit of a highlight of your sector in the year we just finished.
Yes, every time you use the economic indices to measure the performance of insurance, we get a not so fine statistics because of the peculiarities of our sector. For example, when you measure penetration of insurance, you measure premium income. And when you measure premium income against the actual business done in the insurance sector, you find a disconnect because the insurance industry has been busy competing on rates. So the discounts being given, which are not sustainable, tend to disfigure the final figures that come. So where you'll measure penetration with the premium income, you'll find that not much has changed. Not because there has been no new businesses or new classes, but because companies have been fighting on rates. So for that reason, for example, we have decided rates. This year is going to be one of the major issues we have to tackle.
How are you going to tackle it?
Well, we have the policy where rates are determined by regulators in the areas of compulsory classes of insurance, and mainly regulated because we need to protect the consumer. We cannot allow insurance companies to just charge whatever they want to charge. Sometimes there is a tendency to undercut themselves, to think that they are competing, when actually they're discounting themselves out of business. So we have come out already with a policy on rates on the compulsory classes of insurance, advising them on the minimums. They must maintain the minimums which exist in law. That way they will be able, we believe, to meet up their responsibilities.
Now the insurance companies are going to come after you and say you're making regulation difficult for them. You don't allow them to charge market rates, market-determined rates.
I don't think they would in this case because it is more or less an increase in what they have been charging. We believe they have been discounting the premiums below what is economic. And when they cannot pay claims, the industry is blamed and the regulator is blamed. And we'd rather have them charge adequate premium, proper premium, which is not excessive, but which will ensure that they survive.
Ensure that they survive and they pay claims.
They pay claims.
Because the end story of every insurance is about paying claims.
Yes, it is.
Which a number of Nigerians seem unhappy about.
Well, most of the complainants about claim settlements are people that don't have insurance policies. That is Nigeria for you. People that have insurance policies, which are few in relation to our population, have a relatively fair experience with the insurance companies. And every now and then as regulator, we kind of put a focus and such light on claim settlement. And when we did that a year before, we were impressed by the response we got from the insurance public. But most of the complaint comes from the people that don't insure.
Interesting.
Yeah, from stories either they share with others or Now with social media, they pick other people's story and complain about other people's complaint, which are really not genuine.
Well, one of the key issues is about consolidation and perhaps regulatory or market-induced consolidation within the sector. Is that still on your outlook for this year?
It is. It is. In the process of establishing risk-based supervision, which is supervising and regulating the industry based on their ability to insure classes that they fund. So we are encouraging them to see reality and come together and form stronger entities. And where they cannot financially increase their capacities and their abilities, we encourage them to stay in lower classes of insurance within their financial ability. So it doesn't make sense for an insurance company with the capital to do maybe only small house fire insurance, to be involved in aviation or oil. So we are now putting them in their right places. But there will still be a global reform on capitalization, because we have now set up the process of doing a capital verification to see where the companies are generally. But that does not mean we're not taking up the challenges of individual companies. Every company that comes across regulatory issues, for example, when they have a solvency deficiency or capital deficiency, we take them up on their own case. Not generally, we don't have to wait for the whole market review. But we are coming out with a holistic review of minimum capital requirement vis-a-vis the solvency and the ability of the financial ability.
So if you look at the banking sector, for example, and you say we have our tier 1 banks and you have tier 2 banks, are you doing that, to do a stress test and be able to come up with what folks can really identify without digging too much, that this insurance, this is what you do, and this insurance, this is what you do?
That's exactly what risk-based is all about. And by the time we get into implementation, insurance companies themselves, under the supervision and oversight of their board, because we're trying to make the board understand their responsibility is beyond what they assume now. And they would decide their risk appetite. But then if they decide their risk appetite, which is what classes they're going to get involved in and how much of the risk they wish to retain, then we will tell them whether their capital is adequate. If it is not, they will have to increase it before they can move into those classes. That way the client and the consumer is protected also as to what cover is provided. We see companies now kind of, I would say, biting more than they can chew. And without creating the panic unnecessarily, we advise them and